The meaning and process of accounting. Explain the meaning, nature, features and characteristics of accounting. Meaning of accounting. In 1941, the American Institute of Certified Public Accountants (AICPA) had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events, which are, in part at least, of financial character, and interpreting the results thereof. With greater economic development resulting in changing role of accounting, its scope became broader. In 1966, the American Accounting Association, AAA, defined accounting as the process of identifying, measuring and communicating economic information to permit informed judgments and decisions by users of information. In 1970, the Accounting Principles Board of AICPA also emphasized that the function of accounting is to provide quantitative information, primarily financial in nature, about economic entities, that is intended to be useful in making economic decisions. Accounting can therefore be defined as the process of identifying, measuring, recording and communicating the required information relating to the economic events of an organization to the interested users of such information. In order to appreciate the exact nature of accounting, we must understand the following relevant aspects of the definition. 1. Economic events. 2. Identification, measurement, recording and communication. 3. Organization. 4. Interested users of information. Economic events. Business organizations involves economic events. An economic event is known as a happening of consequence to a business organization, which consists of transactions and which are measurable in monetary terms. For example, purchase of machinery, installing and keeping it ready for manufacturing is an event which comprises number of financial transactions such as buying a machine, transportation of machine, site preparation for installation of a machine, expenditure incurred on its installation and trial runs. Thus, accounting identifies bunch of transactions relating to an economic event. If an event involves transactions between an outsider and an organization, these are known as external events. The following are the examples of such transactions: sale of Reebok shoes to the customers, rendering services to the customers by Videocon Limited, purchase of materials from suppliers, payment of monthly rent to the landlord. An internal event is an economic event that occurs entirely between the internal wings of an enterprise, for instance, supply of raw material or components by the stores department to the manufacturing department, payment of wages to the employees, etc. Identification, measurement, recording and communication. Identification, it means determining what transactions to record, that is, to identify events which are to be recorded. It involves observing activities and selecting those events that are of considered financial character and relate to the organization. The business transactions and other economic events, therefore, are evaluated for deciding whether it has to be recorded in books of account. For example, the value of human resources, changes in managerial policies or appointment of personnel are important, but none of these are recorded in books of account. However, when a company makes a sale or purchase, whether on cash or credit, or pays salary, it is recorded in the books of account. Measurement, it means quantification, including estimates, of business transactions into financial terms by using monetary unit, namely rupees and paise as a measuring unit. If an event cannot be quantified in monetary terms, it is not considered for recording in financial accounts. That is why important items like the appointment of a new managing director, signing of contracts or changes in personnel are not shown in the books of accounts. Recording, once the economic events are identified and measured in financial terms, these are recorded in books of account in monetary terms and in a chronological order. Recording is done in a manner that the necessary financial information is summarized, as per well-established practice, and is made available, as and when required. Communication, the economic events are identified, measured and recorded in order that the pertinent information is generated and communicated in a certain form to management and other internal and external users. The information is regularly communicated through accounting reports. These reports provide information that are useful to a variety of users who have an interest in assessing the financial performance and the position of an enterprise, planning and controlling business activities and making necessary decisions from time to time. The accounting information system should be designed in such a way that the right information is communicated to the right person at the right time. Reports can be daily, weekly, monthly, or quarterly, depending upon the needs of the users. An important element in the communication process is the accountant's ability and efficiency in presenting the relevant information. Organization refers to a business enterprise, whether for profit or not for profit motive. Depending upon the size of activities and level of business operation, it can be a sole proprietary concern, partnership firm, cooperative society, company, local authority, municipal corporation, or any other association of persons. Interested users of information, accounting is a means by which necessary financial information about business enterprise is communicated and is also called the language of business. Many users need financial information in order to make important decisions. These users can be divided into two broad categories: internal users and external users. Internal users include Chief Executive, Financial Officer, Vice President, Business Unit Managers, Plant Managers, Store Managers, Line Supervisors, etc. External users include present and potential investors, shareholders, creditors, banks and other financial institutions, debenture holders and other lenders, tax authorities, regulatory agencies, Department of Company Affairs, Registrar of Companies, Securities Exchange Board of India, labor unions, trade associations, stock exchange and customers, etc. Since the primary function of accounting is to provide useful information for decision making, it is a means to an end, with the end being the decision that is helped by the availability of accounting information. Internal users of accounting information: officers, sales staff, owners, all directors and managers, research and development managers, plant managers, production managers, marketing managers, HRM managers, purchasing managers, distribution managers, service managers, internal auditors, budget officers, controllers. External users of accounting information: Lenders, shareholders, governments, consumer groups, external auditors, customers, suppliers, regulators, lawyers, directors, brokers, press contributors, consultants, analysts, traders, underwriters, planners, appraisers, FBI investigators, market researchers, stock and trade researchers, dealers, wholesalers and distributors, accounting system designers, merger services officers, managers and experts, business valuation personnel, researchers and experts, forensic, accounting personnel, external litigation support executives and managers, external and emerging new